What's up, everybody? I am Jaspreet Singh, and welcome to part 2. In part 1, we talked about now the quadrant theory and how money plays a part in your life. We talked about our economic system and how you can win in this economic system. We talked about building a wealthy mind, and then we talked about how you can actually build a financial system that allows you to build wealth first, meaning you save and invest your money before you spend all of your money. Now what we're going to do is we're going to dive deeper into the investing portion of your financial system. How can you use your money as a tool to make you more wealthy instead of just making everybody else rich? And I think the easiest way to understand this is just to go through an example. And well, the only example that I know is what I do. And so I'm going to tell you the 5 places that I invest my money. But as a little bit of a piece of advice, we can say, I do not recommend anybody do exactly what I do. I don't recommend anybody copy what I do because, well, what works for me may or may not work for you. So make sure you always do your own research before you go out and follow anybody, even a random guy on the internet. Anyways, the 5 places where I invest my money are: number 1, my own business, Briefs Media, and the startups that I invest in. Number 2 is physical real estate. Number 3 is stocks. Number 4 is cryptocurrency. And number 5 is physical gold. This is the order that my money goes. I invest the most money into my own business. Then the second most place where I invest my money is into physical real estate, followed by stocks, followed by cryptocurrency, followed by physical gold. Now, when I invest my money into my own business, this is an active investment. This is some place where I'm also investing my time. I'm actively running Briefs Media. I'm actively working to grow the money. When I invest my money into real estate, now this is a active but passive investment at the same time. And the reason why I'm saying that is because it's active in the sense that I'm going out and I'm looking for real estate deals. I'm looking through properties. I'm trying to find the neighborhoods. I'm working with my team members. I'm working with my property managers. I'm working with my contractors to get the best returns from the property, but I don't have to actively work every single day to manage the deal. I have property managers that do that. So my work is really just reviewing the financial reports and then go out and find new deals. When I go out and invest in stocks, I have an active and a passive strategy. When I invest in stocks actively, this is where now I'm going out and I'm looking for individual companies. I'm doing the research, looking for companies that I believe in, that I think are undervalued, that is a good price, and those are the companies that I'll go out and buy. But I also have a passive strategy, which is where now I have an active system where every Wednesday, money leaves my checkings account and it automatically gets invested into a portfolio of funds that gives me exposure to the broader stock market. I don't have to do anything. It's passive, it's automatic, and this continues to happen week after week after week, no matter what's happening in the markets. The 4th place where I invest my money is into cryptocurrency. Now, cryptocurrency is much more speculative. It is a smaller piece of my investment portfolio, but I believe in the potential for cryptocurrency. I believe and understand the value in the blockchain, which is why I invest some of my money in it. But I also understand that it can go down to zero and I can lose everything. I understand that because it's more risky and more volatile. And the way that I invest in cryptocurrency is also with a passive investing system where every day a little bit of my money goes into cryptocurrency investments, whether the market's up or down. I don't even monitor it. It just happens and it's something that I believe in. The 5th place where I invest my money is into physical gold. About 2% of my total investment portfolio is into physical gold. Now, I don't really like to consider this physical gold an investment per se. The reason why is because this gold really doesn't produce much value. It just sits there. When you go and buy gold, it just looks back at you. It doesn't do anything. When you go out and you buy a rental property or you go out and you buy a stock, that company is trying to produce more value. They have employees trying to sell a product. They're trying to get better products. They're trying to innovate. The real estate is also providing value. It's giving somebody a place to live. It's giving a business a place to operate. And if it's in a growing area, it becomes more valuable. With gold, this is more like a doomsday insurance type of thing. This is a place now where I consider it hard money. It's physical money. Gold is recognized around the world as money, and it's a way to kind of store hard cash. And the reason why I own some physical gold is because my theory is if I took $10,000 of cash today, and I took $10,000 worth of physical gold today, and I went to my backyard and I buried both of these things, and then I left it there for 10 years. And 10 years from now, I go and dig them both up. My theory is that this physical gold will have more buying power than the cash. So that's why I own some physical gold. Now, I'm going to give you kind of a allocation of how the portfolio looks, because about 80% of my portfolio, if I take out the business, 80% of my portfolio is real estate and stocks. 18% is more of what I call speculative investments. These are my cryptocurrency. These are my startup investments that I make. And then 2% of my total investment portfolio is physical gold. So the vast majority of my passive or active investment portfolio, things that I'm not actively running like my business, are stocks and real estate. Then a small piece, 18%, are my speculative investments. That's my cryptocurrency, my startups. And then 2% is my, we can call it doomsday insurance or hard money. That's my physical gold. But then if you dive a little bit deeper, the next way that I invest my money is, well, either for cash flow or for appreciation. I like cash flow. I am a cash flow investor primarily. The bulk of my investments here are for cash flow because, well, one of the things I like to say is cash flow funds the guac flow. Because if you own an asset that's paying you month after month after month, quarter after quarter after quarter, year after year after year, and you don't really have to do anything to manage it, well, now you can spend all your money and not be too stressed because you're going to get another cash flow payment next month. So when I invest in real estate, 100% of my real estate portfolio is for cash flow. When I invest in stocks, a big chunk, the majority of my passive stock market portfolio is for cash flow, dividend paying stocks. We'll explain what that means in a little bit. And even on the active side of my stock market portfolio, a big chunk of that is also for cash flow. And so what we're going to be going through in this part of this quest is now, number one, how can you invest your money in places like real estate? How can you invest your money in places like stocks? How do you invest your money into funds, ETFs, index funds, mutual funds? How do you analyze these things? But then also, how do you build an investment system that works for you? What's the difference of investing for appreciation versus investing for cash flow? When you invest for cash flow, you buy something and then you're using the cash flow that this asset generates. When you invest for appreciation, now you're investing into an asset. Say you buy a stock for $100 and now you want to see the stock price go up to $200 a share, but you don't actually make any money until you sell. Now, there's nothing wrong with either one of these, but what we're going to be going through throughout this quest is the different ways that you can invest your money. How do you analyze your investments and how do you make an investing decision that works with your goals and your investing strategy? Now, we talked about this in the first part, but the reason why you need to invest your money and the reason why investing is so important is because investing is how you become wealthy. You will not be able to save your way to wealth. And if you spend all your money, well, you're making somebody else wealthy, but not yourself. So if you want to become wealthy, you're going to have to put your money to work. That means owning assets. That means investing your money. And in an economic system that rewards investors, not just financially, but also on the tax side, it is so important for you to get serious about investing your money because that's where the real wealth is built. And that's what we're going to be going through in this part of the quest because, well, wealthy people want to make their money from assets, not their salary. And by the end of this quest, you're going to understand exactly how to do that. Your exercises for this lesson are, number one, I want you to think about, do you want to be more of a passive investor or do you want to be more of an active investor? Do you want to be passive in the sense that you just set an automated system and now you can set it and forget it and not have to worry about your investments? Or do you want to get more involved and research your investments and keep learning about the financials and keep learning about how to invest your money? Not everybody wants to do that. Figure out what do you want to do. And then I want you to write it down in the community. Hold yourself accountable and hold other investors accountable as well. And the second thing that I want you to do is I want you to think about which asset classes do you want to invest in and which asset class do you want to invest in first? Is it stocks? Is it real estate? Is it startups? Is it something in the blockchain? Maybe it's physical gold. What do you want to invest in first and which asset classes do you want to invest in? Because this is going to help guide your next investing steps. And with that, I'll see you in the next lesson.